Hi, guys. Welcome to the How I Raised It podcast, the show where we get an inside, unfiltered look at how real entrepreneurs raise capital. I'm your host, Nathan Beckert, and today's episode is with Robbie Crabtree of Founder Fundraising. Robbie helps founders craft stories that raise capital, and today's episode is packed with amazing tips that will help you tell your story and nail your investor pitch. I really like this one. I've been doing this type of work forever, and I learned a ton from this episode, so you're in for a treat. If you're tuning into this podcast to raise capital for your business, I've created a super valuable free welcome package for you. It includes a list of 2,500 investors who don't require a warm intro, plus 200 questions that investors are going to ask you. So it's really going to help you get ready to raise money. To get instant access to this, please click the link in the first comment. While you're there, please leave us a nice comment, what you like about this episode or this series in general. We really appreciate that. Thank you. Last but not least, if you enjoy this conversation and think someone else would too, please share it with them and hit that subscribe button to get all our latest episodes. Thank you. Now sit back and enjoy this action-packed episode with Robbie.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by foundersuite.com. Today I have Robbie Crabtree of Founder Fundraising coming to us from Miami, Florida. How's your day going?
It is great, Nathan. I'm excited to be here. How's everything with you?
It's good. It's good. It's almost Friday, headed off for Easter break. I'm excited to take a little time with the kids and go to Adventureland, which is part of Busch Gardens, I think. I don't even know, but it's crazy water slides. So that'll be my week next week, are crazy water slides with the kids. So that sounds fun.
It takes me back. I used to go to Splashtown in Houston. I remember those trips quite fondly.
Although my daughter now says she won't go in them because she doesn't think the water's clean enough. So we'll see. Maybe she'll overcome her fear of germs.
To be fair, she's probably right. But nonetheless, when kids get there, they tend to get into it anyways.
Right. You can't overthink it. You can't analyze it too much. Just jump into the damn water tube. Anyway, cool. I'm happy to have you here. I'm very excited about this talk. Let's just start right into it. What is founderfundraising.com, your business?
So we work with startup founders around storytelling and fundraising. At its core, that is what we do, is we help them tell better stories, both from a founder story and a vision story perspective, and then also understand how to fundraise venture capital effectively to reduce the stress, understand the rules of the game and raise the rounds that they need to build the business of their imagination, the vision that they have, and make it come true. So at its core, that's what we do.
And we'll get into a little more on what you do, but how'd you get to this point? What were you doing before? What's the backstory?
The backstory is not going to make a ton of sense until you hear it, but I actually was a trial lawyer for 7 years. I tried 102 jury trials in Dallas, Texas, on all things that you can think of, gang cases like cartel cases and Aryan Brotherhood cases, to capital murder cases where people were going away for the rest of their lives for what they had done. And then also I spent the last 16 months or so of my career focused on child abuse cases. So physical abuse, sexual abuse, and even child death cases. And it was there that I actually started using the term of what my bigger companies call, which is competitive storytelling. And because people would ask me, Robbie, what's being a trial lawyer like? And I'd always say, well, it's just a game of competitive storytelling. If I tell the best story, I win. Now, this came in large part because I did extemporaneous speaking in college or in high school. I was a college baseball player. I was a history major in college. So I've always been kind of fascinated with language, oratory, and then competing. And then in a courtroom, it was working. So I went to SMU Law School and started coaching the national mock trial team there and actually teaching trial advocacy at the law school. And when I did that, I saw, hey, the skills that were working for me in a courtroom can be taught to other people. But if you know lawyers, you probably don't want to spend the rest of your life around lawyers. So my first idea was I'd build an ed tech for lawyers. I decided, there's actually a better use case for this. So instead of living in the world of nightmares, which is where lawyers tend to live, I said, why don't we live in the future where dreams are being built? And I said, who is doing that? That work is being done by founders and by people in the venture capital world. So I ended up building an ed tech originally around public speaking for tech employees That got acquired at the end of 2020. And then I started really building and focusing on founder fundraising to bring this skill set to founders so that they could actually understand from a trial lawyer's perspective, how do we influence people? How do we persuade them? How do we tell the story that actually closes the deal and gets it done?
Yeah, I like it. I like that transition from nightmares into dreams. I think that's a fun kind of visual segue there, and good for you. I can't imagine being a trial lawyer. I think I would take that stress home with me every night, and be hard to displace. I don't know if you were able to. Very good. So let's just jump into that. I mean, maybe just give a little more on what specifically your business does. Here's your 30 seconds to give a little pitch, but what specifically your business does for startups, like kind of the engagement model, and then we'll get into some, kind of tactical stuff on storytelling. Yeah.
The term that I call myself kind of changes because we really blend coaching, consulting, advising, because every founder needs a little bit different blend of that in order to do it right. But at the core of what we do is we get in the trenches with founders and say, hey, here's how we're going to actually create your story. We're going to create your founder story together. We're going to create your vision story together. Then we're going to teach you what the strategy is to run a clean process in the fundraising round. And then how do we actually run a first meeting? How do you run a second meeting? How do you move from first to second meeting and second meeting to getting a term sheet and ultimately going through that process? We also work with them on the delivery, right? Leaning into me being in a courtroom for 200 days every year for 7 years. We're teaching them, how do you give the right tone? How do you present it in a way that makes people feel that you have that it factor? And then finally, we're working on all of the strategic communication and all the questions that are going to come up so that they can be really compelling impromptu speakers as well. So when they're asked those tough questions, they don't flounder and ramble and go all over the place. So at the end of the day, what we do is we work with a founder to make sure that they are prepared for every piece of the fundraising process, and then give them coaching throughout that, looking at what's going on and just help them understand, here's what you're doing well, here's what you're doing poorly. And a lot of times there's a lot of just, hey, everything's going to be okay. Just trust the process. We put it in place. If you do it, you're going to get to the end goal, which is a successful fundraise and the investors that you want. And so that's really what we do at Founder Fundraising.
Yeah, I like it. I used to do this a little bit in my previous business, which was called Venture Archetypes. It was in some ways probably similar, had some similarities. We would get a startup founder in, oftentimes because they needed a financial model, but we'd also build on the pitch deck. And I actually loved that process. What we would do, we'd get the financial model in, we'd do the pitch deck, and then we'd build them a target list of investors and kind of coach them along the way. But what I really loved was the pitch deck creation and that storytelling process. I thought that was fun. It was creative. And I think founders need it because it's actually very hard to tell your own story sometimes as a founder. I even struggled with that when I was building the pitch deck for Founder Suite. I was great at telling other people's stories, hard time with mine. So maybe let's get into that. How does, share some advice and or tactics that help founders tell their story, build their vision. Go.
Two sides of the story, and this is where a lot of mistakes get made. So there's the founder story, and then there's the vision story. Many founders completely ignore the founder story. They think that when they're asked, tell me about what you're building, that it means I just need to tell them about the business. And it is a mistake because at the end of the day, founders are the ones who are being invested in. Especially we know this, right? In early stage, so even growth stage, you're really talking, anywhere from pre-seed to Series B. It's the founder that you're betting on, because realistically, you're going to have to pivot. You're going to have to make some sort of change. And the only thing we know that's going to be consistent is the founder and their makeup and who they are, what makes them special. So let me break this down. When it comes to the founder story, I always think about it this way. There are 3 questions that a founder has to ask himself and then do the work to build the story around. And that is, how did you get here? Why do you care? And what makes you special? Those seem very simple questions, but they allow a founder to do really deep and meaningful work, because we want to show kind of 3 pieces of the founder to an investor. We want to show their brain. So we want to show how they think. We want to show their eyes and how they see the world. And then we want to show their heart, which is how they feel and who they really are. When we can demonstrate that, it creates a level of trust between the founder and the investor. Now, what this oftentimes comes down to is I have to ask the founder, when I say, how did you get here? Start when you were 10. And I use 10 as just this kind of number that means childhood. And then I say, don't type it, turn on a recorder, whether it's a video or an audio recorder, and just speak out your answer. And you'll probably end up with 20 minutes, 40 minutes, 60 minutes of content. And then it is go through that process and narrow it down. Now, we can talk about how to narrow it down from there, but the second story is the vision story. And that is a story that is really needs to be focused on what I call emotional storytelling. Emotional storytelling isn't trying to say the step-by-step way that we're going to go from where we are today to that big IPO or exit that we see in the future, because there's inevitably going to be pushback. There's going to be some sort of objection of, I don't think you can do that. Instead, what it is just painting the picture of the future, of this is the future that I see and how big and bold and ambitious it is, because that's how we get venture capitalists excited to join the journey, right? And so the origin story gives them that, like, why now, kind of why can I trust this founder in the immediate term? The vision story paints a big picture. Now, the vision story, when we're doing that, and leading into this emotional storytelling, we want to make sure that we're not trying to say we are right. A founder should not try to prove they are right. They should just try to show, what if I'm right? Here's the vision I see, venture capitalists. What if I get this right? What if what I'm telling you has a chance to be true? And if that's true, it's the next, pick your big company that you want to compare it to. So that's kind of how I think about those two different stories and how we build them out.
Yeah, that's really interesting. And how, let's see, we could get really into the weeds of how you do that, which if you want to share any more on some of the tactics for teasing out those stories from the founders, that might be interesting. But where I was going with this question is, how do you weave those into ultimately, I guess, the pitch deck? Or, how do you kind of get those into a format that I can send to an investor or present to an investor?
So how do we put them together? They're kind of two standalone stories that can be told independently, but they also can be told as one story. And this is how we actually end the founder origin story, which leads into the vision story. And the way you do that is just like you do it in movies or television, right? Where when we finish, John Wick 4 just came out recently, right? So when John Wick 3 finishes, that they're teasing a John Wick 4 because the story isn't finished. Yeah. Or when you're reading your favorite book and you get to the end of chapter 3 and you're like, I've got to figure out what's going to happen to Harry in chapter 4. So I'm going to turn the page and keep reading. It's that process where we invite the investor, say, tell me more about that. And so there's a way that you kind of dismount from the founder origin story that leads really seamlessly into the vision story. Now, how does that come into fundraising, if you will, when it's presented in a deck or format like that? So one, these should be a part of that pitch deck that you're going to use. I like to see pitch decks primarily used as a follow-on tool after the first meeting, which is a highly opinionated approach to fundraising, because one of the things I know me and you talked about previously is the need for founders to build relationships. The founders that I tend to be coaching and working with, we work on building relationships with investors 6, 9, 12 months ahead of time of that round that they're going out to raise. And it doesn't just have to be investors. It can also just be warm intros, right? So it can be somebody that we know is going to be able to intro us to the right investor. When you do that, it becomes very easy to create a blurb or something saying, hey, we're kicking off a fundraise. Here's like the 3 bullet points. Here's what we're doing. Is it worth chatting? And a lot of times what we see is that leads to a very easy, yes, let's chat. Then they tell the story in that first meeting, because I think it should be a conversation and not really a pitch, because that's how we build a connection. And then at the end of the first meeting, yeah, we'll share our deck so you can see it, dig in, share it with your colleagues, set it up for a second call. And in the deck, again, the deck should tell the story as well. And this is really what we think about headlines. Headlines should tell the story arc of the entire thing. If I drop someone's deck on the ground, let's say I printed it out old school and it fell out of my hands, I should be able to pick it up and put it back in order just from the headlines alone and say, okay, I understand what this story is. So that's why I don't like seeing decks that say problem, solution, market, why now? That doesn't tell me a story. That makes you sound like every other founder out there. And the biggest thing in fundraising is to stand out, to cut through the noise.
Okay, let's riff on that a little bit. So I like that too. That's something I often tell founders, the headline, and we're talking kind of like the titles, the slide title. And so do you like declarative statements in the headline, or what are some examples of like good headlines that tell a story, not just problem solution? Yeah.
So sometimes it's declarative statements that plant a flag. I think that there is a need to create filters in our story. If the story is for everyone, it's for no one. there's no way that every investor should hear it and be like, oh, this is amazing. That's just not the reality. I mean, unless you're very mature, right? And then it's very easy to say everyone's excited about OpenAI. Sure, I get that. But the reality is most startups aren't at that phase. And so we have to filter for the right people. So declarative statements, plant a flag. The other thing that I like to think a lot when it comes to storytelling is the goal of storytelling is to create intrigue and to make me say, tell me more. So what we want to do is make sure that every slide is inviting that investor to read it and press next because they want to keep going in. And so it's making them think, this is interesting. I need to dig deeper. There might be something here. And that's really what we're doing. So declarative statements, rhetorical questions, shocking statistics, traction numbers, even quotes by customers or quotes by other people that might be recognized. All of these are ways to create intrigue and make somebody say, that's interesting. I want to learn more about what's going on. It's just always like, how do I get them to double click deeper, double click deeper. And that's where a winning headline strategy comes in.
Yeah, I like that. And okay, I want to go back a little bit to kind of, I'm going to be jumping around a little bit, but the founder story and the founder vision. And let's take even just the very first slide of a pitch deck. Which one do you typically present? The vision or the backstory? Or is it all on one slide? Like, what's a good opening slide given your framework here?
The worst but most true answer when it comes to fundraising is it depends. And this is why formulas that we see out there oftentimes lead founders to fail.
Sure.
Because every founder is going to be a little bit different. Some founders, they are so impressive or their story is so directly tied to what they're doing that it has to be the lead. But in other cases, it's the vision or something that is in this moment of why now that just grabs your attention that says, wow, we have to keep reading. And so the reality is what we're looking for is the opening hook. And the opening hook is what is going to make the person sit up and say, I'm going to move deeper into this. Because we know we have about 3-5 seconds in general for somebody to grab our attention when we're listening to them speak. The same is true for a deck. If I see a deck and that first slide doesn't make any sense to me, I'm done. Because if they don't realize that real estate on slide 1 is their most valuable, then the rest of it, I don't think that there's probably going to be anything in it for me. So I always say what you should be looking for on that first slide when it comes to what do you start with is what creates the most intrigue. Because if we create the most intrigue, human nature wants to close loops when we feel like there's curiosity that's been hit. And so that's really what it looks at. And so you have to look at each one individually. And again, that's why when we do the work, we aren't doing the work saying like, hey, here's just a pitch deck formula, go fill it in. It's no, what is your story? What are the highlights of what you're doing? And then how do we structure that in the most compelling way?
Yeah, I like that. When I do some pitch deck review and tune up for some of our gold subscribers every now and then, and two things I emphasize to almost every single one I do this for, it's like, you've got to grab their attention in 30 seconds or less, or you lose it. Probably even more like 10 seconds, or you lose it. And so a lot of my feedback on their decks is all about that opening slide or two. Because if you're not, I actually have them pitch to me. And if you haven't, like you're saying, captured my interest in that first slide, I'm probably already tuning out because as a VC, I'm sitting through 10 of these a day, 12 of these a day, and you're just kind of looking for reasons to say no. Can you think of any good examples of like a really good hook? I don't know if you can share any client examples or even just kind of a made up one that, has worked well. Yeah. Or even types of hooks. Cause it's like, I've seen a few. I mean, I always like to, here's one thing I like to see sometimes is that first slide kind of has that emotional appeal to it and kind of depends on what the startup does. But then a lot of the rest of the deck might be the more logical part. But I always like to start off with something really emotional, like make me feel something and then get into my logic brain. But what do you think?
So we obviously, we have the title slide and then we have the first slide, right? Title slide is going to be what's the one-liner of your company kind of idea. And that's super important to really nail down. One of my favorite ones that I've heard from a founder that I worked with was we're like Mary Poppins, but for space. And I think that one Like you might not know exactly what it is, but it's enough to be like, I want to learn more. And then you describe it, and it's they're helping manufacturers in space to deliver the goods that are being manufactured by creating these parachute contraptions and technology so that it can float back down to Earth and doesn't require a rocket going back and forth, back and forth. And they happen to be a UK company. They're a Welsh company. And so with that, it makes perfect sense. If it's Mary Poppins, we think of, from the UK, and we think of her with the umbrella floating through the sky and being able to fly with the umbrella. Well, that's exactly what they're doing. So they say, we're like Mary Poppins, but for space. That's a great opening line. Like that makes me it's whimsical. It's true to who that founder is. Everything about it makes sense. So that is an easy one to do. When we think about hooks, right, beyond that opening one-liner, then it really, some of them can be rhetorical questions that make you think. Like I've used this one in the past. It's the Jeff Bezos quote, which is, what's not going to change in the next 10 years? It's an interesting way to set a frame, especially if you tie a little bit of kind of your specific problem set into that. So that's a way that you can do it. Another one is, something as simple as like, I want you to meet 9-year-old so-and-so, and just like put that in like ... dots. And then you have a picture of this person who you start telling the story of in the deck on slide 1. And now all of a sudden it's, all right, I've got the human element to why you're doing the work that you're doing. Or it might be that you're in the education space and you're like, people are spending, hundreds of thousands and taking on all this debt, and then there's no jobs for them because they study the wrong things. So you could create a sense of like, how many people, 50+% of college graduates will leave with the wrong skill set to get a job and end up being underemployed. And meanwhile, we have 30 million jobs that are ready to be filled. Why isn't this chasm being crossed? You could do something like that, right? Where it's a very visual kind of analogy representation of numbers plus a chasm, which means we understand we need to build a bridge. And so that's another kind of variation that I would think about potentially using.
Yeah, those are good. I like that. These are nice things for listeners to actually think about, like, what is their opening hook? I like the rhetorical question, kind of the user case or user scenario. Meet Janet, a 9-year-old girl who has this issue. A shocking statistic, is kind of like what you're saying there, something interesting. Any other good opening hook frameworks or archetypes there?
So, I mean, our biggest hooks are always like story, quote, rhetorical question, shocking statistic, shocking fact, or something that is counterintuitive.
Yeah.
That's always one that's really good, right? Something that as soon as either counterintuitive or something that is obvious once you hear it, but it's not obvious at the start. And as soon as someone hears it, they're like, yeah, what? Why haven't I thought of that? And those work really nicely too, because it creates a sense from the investor of, oh, there is a huge opportunity. If I was missing it, but it's this clear, then yeah, we have something here. So those would be kind of the core ones that I would look at anytime I'm building out a hook.
I like it. All right. I don't want to spend the whole time on pitch decks, but I think there's some good stuff here. So good opening hook, using headlines to kind of narrate the story. Do you usually recommend folks have a super beyond the headline? Like, is the rest of the deck very visual, very metaphorical, super minimalist, or any other kind of just general pitch deck guidance you like to give?
So one thing that I like is for founders to have a robust kind of deck available for them, and then they can choose what is needed for that investor. So my core deck that I like to see is one that is more visual, that brings things to life. So it's easy for that person to just read it, understand what's going on, see the product potentially, see the value prop, understand what's going on. Obviously charts, graphs, all those sort of things can make things nice. I like this also because if a founder is going to present, if an investor is going to ask, hey, would you walk us through the deck? I don't want a deck that's heavy in text, because what happens is fractured attention. The moment you have a deck that's heavy in information and you're also speaking, the human brain can't keep up. They're going back and forth, back and forth, back and forth. And what I find when this happens, and founders will come to me that I'm working with, and they'll be super frustrated. And they're like, I covered this. And then the investor asks a question. So obviously I must be saying it wrong. And then I'll watch the replay and I'll be like, no, you said it perfectly fine. The problem is you went to the slide, you immediately started speaking. And by the time you finished speaking, you moved on to the next slide. Well, they couldn't do two things at once. They couldn't read all of the information, also listen to you. So they missed part of what you were saying when they focused on your slide, which is why if you're going to have a text heavy, you need to make sure to give the investor time to read through that before you start speaking. So I like to say when you press next, give 3 or 5 seconds for them to just get their bearings on the slide, and then you can start speaking to tell the rest of the story. We give that brain the moment to say, okay, I understand what's going on here. Now I can focus on what the speaker is actually delivering to me. But that's why I say you should also have text heavy to explain concepts and different things. So you can use it as a follow-on tool, because when an investor goes to their partner and is pitching and say, hey, we should have a full partner meeting on this, they need to be able to clearly articulate why that should happen. And so the founder's role is to make sure that you equip them with the information to go and be your champion to get to that next meeting. And so that means sometimes we've got to take information, put it in a really nice, concise way, and let them do the storytelling from there.
Yeah, that's good. Yeah, I agree with you. I think one of the biggest problems, probably the biggest problem I see with a lot of decks that come across my desk, is they're just too text heavy. And I always use a thing, if I can't flip through it on my iPhone and kind of understand what you do and kind of where the company's at, literally flipping through the slides, then it's a fail, right? Like, I'm not going to go and read a dense deck. And conversely, if you're presenting a deck like that, I can read faster. You put a slide up on a projector, I can read faster than you can say it. So there's that sort of fractured attention thing you're getting at. I think that's important. Would you agree with this or not, that the deck that you present in a live meeting or Zoom should be minimalist, but the deck that you send afterwards as a follow-up, or even send beforehand as a precursor, can be more text heavy? Is that too simplistic of a general rule? Yeah.
No, I don't think it's too simple. The only thing with the super text heavy, if you're sending it before, like you just mentioned, is a lot of times that creates friction where the investor isn't going to read it.
Yeah.
So you may want something that is still more minimalistic and just gets the core idea part. Again, that's just making them say, this is interesting enough. Like, I'll take the call. But as a follow-on, I think once you've done that, going more text heavy there to explain more concepts and give kind of more meat, if you will, is totally fair game. And that's what it should be at that point. Because again, this is why you have to understand the rules of the game of fundraising, because you deal with investors differently before the first meeting. You deal with them differently at the first meeting. You deal with them differently in between the first and second meeting, at the second meeting, because it's very similar to a sales process in a lot of ways. It's also very similar to a trial, where at the beginning I'm picking a jury and they don't know me, and I'm just like having a more kind of open dialogue, getting to know them, they're going to know me. Then opening statement, I start to give them more about what my case is about, very similar to the first call that a founder has, is what's coming. And then by the end, you're giving the closing argument, or in their case, they're pitching to all the partners and saying, you should make this deal. In my case, I was pitching to my 12 jurors who had spent a week or 2 weeks with me hearing the case, just like an investor goes through a week or 2 weeks hearing the case as to why I should invest in this. And I would say, hey, find this person guilty. And it's a very similar process, but we have to understand there are stages and we do things differently at those different points.
Yeah, totally. Let's get into that a bit. So you're a founder, you've got a great deck with a strong opening hook, great storytelling in it. You get invited to come in and do a first meeting. Maybe share some of your guidance or advice you give founders for running those meetings and getting the first meeting to lead to the next, and so on and so forth.
I always think the first meeting is about building connection and having conversation. At the end of the day, if we do that well, your chances for a second meeting go way up. And that means going in not just thinking, I want their money. I get that a founder who is listening to this and fundraising wants the money. We all understand that, and that's okay. The money is there for you. But if you go in thinking this person on the other end is just here for is just the money, it creates this transactional, this kind of cold relationship dynamic, and humans just don't operate that way. So I always say when you go into the first meeting, it should be build rapport. If you had it from an intro source, make sure you talk about that intro source and how they got to know them, and make sure you reinforce that idea of, oh, this is someone who came to me from a trusted source. That again, so you want to reinforce that, even if you think, well, they already know, it doesn't hurt to say, hey, like Nathan introduced us. How'd you get to meet Nathan? And how long have you known him? And we're going to build that. And all of a sudden they're going to say, oh yeah, Nathan introduced me to this. This must be a good founder. And then I like to say, you should actually ask the investor to tell you their story, to know who they are, because it creates a sense of reciprocity and also creates we know humans, the favorite word is their own name. And humans also love to talk about themselves. So if we can give an investor the chance to talk about their story, how they got here, all the cool things they've done, it puts him in a really positive mood before you go and give your kind of story and your pitch. So we've actually framed them in a positive mood where they feel like a normal human instead of just a source of capital. And it puts it in a glass half full instead of a glass half empty kind of framework. Then I tell founders, tell your founder story, tell your vision story, and then have some questions. And you can go back and forth, ask them questions. They'll ask you questions, which takes us to the end. I always say at the end, this is one of the biggest pieces to get to a second call. If it feels like it's gone well, you have to ask the question, hey, it feels like there's some alignment here. I've really enjoyed the conversation together. Would it make sense to go ahead and set up a second call so we can dive deeper to see if it's a good fit? And it's a very easy way to open that. And you get, 3 answers, yes, maybe no. And there's a decision tree based on all of those and how you navigate it. But founders have to be willing to ask that. And so many of them get to the end of a first meeting or a first call, and they finish with, okay, well, this was great. Well, you'll just let me know. They're not going to let you know. That is such a missed opportunity, because investors want less friction, and you have to ask them to say, hey, what's next steps? How do we move this forward? Because at the end of the day, that's what a good founder does. A good founder understands how to run a process, because they're going to have to do it for recruits. They're going to have to do it for sales. And this is just a part of that game too.
Yeah, I like that. So I like that kind of exact phrasing, like, feels like there's some good alignment here. I really enjoyed this. Shall we go ahead and set up a second meeting? And then see what the response is, and probably, like you're saying, yeah, let's set that up, or no, I don't, no, I don't really want to, or probably the more likely answer is we'll talk it over internally and get back to you. Or I don't know. How do you, any more on?
Yep.
Yeah, go ahead.
I totally get where you're going. I will say it's funny because we'll work with both technical and non-technical founders. And it's very funny when we get this to technical founders, you'll see them, it will be like middle of a sentence. And there will be 3 minutes left in the meeting, and they will just go stop mid-sentence and just say that exact phrase to an investor. And the investor sometimes is just kind of like shocked.
Yeah.
What just happened here? But then they take that moment to orient it, and it creates a sense of trust, because it's very easy for them now to understand what to do with this final bit of the meeting. So it leads to a ridiculously high increase in conversion to a second meeting just by asking that question and doing it in that very kind of non-pushy way, right? Now we have yes, maybe no. No. Okay, great. Like, I appreciate that. Like, we know we're not for everyone. I would love to just stay in touch. It seems like we had a good conversation anyways. And, if there's anyone that you think would be interested in this, I would love for you to introduce us. And if not, no worries. Well, now you might get some introductions, because it could be that you weren't a fit because maybe you were a little bit too early, or maybe you're just outside of what they want to invest in right now. Or maybe their fund actually doesn't have money to invest right now because they're doing a capital call in a couple of weeks and they're not sure how it's going to go. Well, great. You can use that no and still just see. The worst they say is, no, I don't think it's great for us. And, we can just kind of move on. Okay, like that didn't hurt anybody's feelings. We can move on. The maybe, like you said, is the toughest one. So let's do yes first, and we'll go to maybe. Yes is, yes, we'd love to. Great. Set the meeting there. I always tell founders, as soon as you get a yes, say, hey, well, here's some days and times I work on my end. What's good for you? If they say yes, but I need to check in with my team, you can do 2 routes there. You can say, hey, would it make sense to just set a call on our calendar? We can always change it if it doesn't work for your team, so that we get it on the schedule. Or we can just say, hey, that makes total sense. When should I expect to hear from you about when a good day would be? And get a day that you actually say, oh, well, today is Thursday. I would say by Monday, we'll be able to let you know. Great. So if I don't hear from you on Monday, I'll just reach out with some times on my end and we can schedule it that way. Sound good? So we always know there's a clear next step as to what the kind of expectations are. So when we reach out, we say, hey, like we talked about, I haven't heard from you and that's Monday. I wanted to offer some times at work on my end. On the maybes, maybe is similar to that last one with the yes, but the maybe is, okay, great. That makes total sense. I know you have a process. You got to talk to people. When should I expect to hear if you want to move forward? And a lot of times investors, will kind of drag their feet and say, sometime next week, which doesn't really help a founder because they don't know then when to follow up. So I always say, just get an answer, right? So you follow up and say, all right, when you say next week, would like Wednesday be okay? I can expect to hear from you by Wednesday. And then it's, you can hear from me by Wednesday. And I tell founders to even go a step further. And look, if I don't hear from you by Wednesday, I'll just take it that it wasn't a good fit and we'll go ahead and move on. Is that fair? Because now we give the
founders should actually say that, say like, hey, is Wednesday a good, can I expect to hear from you Wednesday? And they say, yeah, that sounds good. And then the founder says, if I don't hear from you by Wednesday, can I assume it's not a good fit and I'll move on? Like kind of not forcing their hand, but putting a little bit of gentle pressure on them. Yeah.
And it's good for both parties because if the investor doesn't want to say no, oftentimes then they ghost founders. And this is just a way to be like, look, if you ghost me, we're just taking it as a no. And like, I'm not holding that against you. And for the founder, it allows them to close that open loop. So if they get to Wednesday, they can close it. Now, founders can make a decision. If they really love the investor, they can always follow up and say, hey, I know that, since we didn't hear on Wednesday, it's not a good fit for you. I just want to say thanks again for all your time. Would love to stay in touch. Maybe a future round will be better for you. You can do that. And sometimes that will actually awaken them and bring them back into the game. But it's just an easy way for founders to move the maybes and not sit there wondering, am I going to hear from them? Am I going to hear from them? And I just see it all the time. It causes so much stress and strain on founders when they're sitting there thinking, I had a pretty good call and maybe they'll get back to me. It is awful to watch founders go through this. And this is why I say, look, you're going to push some people away, but it's so much better for your mental health and your mental space to run a clean process this way.
I agree. I remember being in the trenches, helping clients fundraise. And there was that limbo that is just maddening. And you're refreshing your inbox like every 5 seconds, hoping that email comes in from that investor, and it drives you crazy. So I like that. I like this. It's good. Any other tips, I guess, for maybe the second meeting? Let's say they say, yes, we set up a second meeting. How does your story change? Or do you kind of repeat what you did in the first meeting? Because there are probably some new people in this second meeting, or, kind of let's walk through it.
When there are new people, I always tell founders, you want to find out what those new people know. And we don't want to assume anything. So always just ask, hey, I want to make sure that we have a really productive meeting here. I know John and Jerry and Sam, you all joined new. I'm curious, what was Robert able to tell you about myself as a founder and also what we're building here at Founder Fundraising? And get them to actually say, I didn't get to hear much about you as a founder, but I do understand what you're doing with Founder Fundraising. So it'd be great to actually hear from you and who you are as a founder. They'll give that insight. And then okay, I don't need to share the vision story again because they're pretty clear on that. And then I can just share the founder story. I'll share the founder story. I might ask them, hey, I would love to know just a quick version of kind of who you are, your story, so I can get to know you, because I really enjoyed getting to know Robert last time. And then I'm happy to answer any questions that you have. And really what it is just maintaining a proper meeting dynamics where I am both gathering information, but leading the conversation, but allowing the investor to feel like they're also in control of where this conversation is going. So it's not one-sided, because a founder should never be in a meeting where it just feels like they're on a firing line where people are just like firing things at them over, and you're just like back on your heels. And this is a way to, again, share stories, get to know each other, dig into questions. And on a second meeting, the reality is founders have to be ready to answer those questions that are going to be coming, the tough ones, right? And that's where preparation comes in ahead of time. You have to be prepared. You should understand what your positioning is, what your framing is of your answers. You should know your numbers really well, especially financial numbers, things like, your CAC, LTV, all of these sort of things. You certainly need to know go to market and those sort of strategies. You should be super clear when you're asked these questions. It should not take a long rambling answer. It should not take, I'm not exactly sure what that number is. Like, this is your moment to shine and show that you came prepared to really deliver and know your stuff. So I think that is a big key in this one, which also comes into when you're asked questions, pause before answering them. Give yourself 2 or 3 seconds to think through the right answer, structure and frame them the right way, and then deliver them in a confident, but also approachable manner. I call it approachable expertise, where I know I'm the expert, but I also want to invite a conversation and questions from you. I'm not saying I'm, stuck up and I'm the only source of truth. We can have a conversation.
Yeah, that's good. One of the things I think happens, and this is more when pitching VCs than maybe angels, but you have that first meeting with the VC. It's often with one person, and it can be very conversational, right? And I've even seen it where we don't have the deck out. We just kind of talk about it, or we go for a walk, go for a hike, go to have coffee, and just communicate, right? But then as it gets to the second meeting, third meeting, they bring in more partners. And by that third or fourth meeting, it might be literally, I've been in these meetings where it's like 10 people. All the partners are in the meeting, and it's actually very stressful, and it's hard to be that conversational, fluid guy when you're got an audience of 10 very successful partners sitting there, glaring at you. So any changes or tips you would recommend as you progress and get further down the chain with a venture firm? What do you do to adapt to that and maintain poise?
And this is especially true. We see this, the later stages, right? Series A, B, C kind of fundraisers, where a lot more people are involved in that process. And when it comes to that, when we're working with founders, we always tell them, like, one, we've got to just be hyper prepared. And what I mean by that is I should be able to wake you up in the middle of the night and you answer these questions like the back of your hand. You should be that polished. Now, it doesn't mean that you're being inauthentic. Right? The best speakers are not being inauthentic. They are just practice and know what they're talking about. And that's what a good founder should. You should internalize all of these answers because they're the real answers. We're not making up false answers. We're just packaging what's really there in the most compelling way and the most clear way to an investor. So what I say to founders is we want to think about a couple things in those meetings. One, it is going to be a little bit more where you are just kind of taking questions and answering them back. So we have to acknowledge that it's not going to be as free flowing as maybe the early ones. And that's totally fair. If we go in with that expectation, the founder is going to be better for it. And that means when you hear the question, I always tell founders, one of the mistakes founders make is they don't actually listen to the question. When I was a trial lawyer, I would prepare every single witness by asking them one question. And I would say, do you know what time it is? And almost always they would do one of two things. They either take out their phone or they would look down at their watch, and then they would tell me what time it was. And then I'd ask them again, listen to my question. Do you know what time it is? I'm not asking for what time it actually is. I'm asking for a yes or a no answer. You either know what time it is or you don't know what time it is. And it was an exercise in getting the witness to listen to the actual question being asked and not to assume things. And so founders oftentimes make assumptions when they're listening to a question because they aren't listening close enough. And then they answer it improperly because of that. So you have to really turn on this active listening skill. You have to get comfortable pausing before you answer. So you have the time to think about, all right, this is what I just heard. Here's how I answer it. And then stay in control when you're delivering it. Too many founders try to speak too fast to show, I know what I'm talking about. And as a result, they get out over their skis and they start tumbling down. So we always are saying, hey, just slow down with your answer. It's more about presenting a sense of calmness and control to investors than it is about even necessarily getting the answer exactly right. Because if they feel like you are the type of founder CEO that can handle tough questions, it creates a greater sense of confidence and trust in them, even if the answer wasn't exactly right. And so that's a lot of the work that we do in that setting, is just making sure that they kind of have those dynamics in place. And of course, we practice a lot to help them get ready. We role play a whole bunch. I mean, I tell any founder, role play, get people who will throw those things at you and be tough. it will make you better. But those are some of the kind of the tips that I would say going into one of those bigger meetings.
Yeah, I like it. Yeah, that's really good. Those bigger meetings are an interesting dynamic because it's a good sign. They're interested in you. They keep bringing you back. You're getting to the partners meeting. That's a big deal. But in many cases, any one of those 7 partners has a veto ability, right? Like any tips for, let's say you're feeling confident. I love the calm control thing, and that it's really almost how you respond, not exactly your answer that matters. Any tips for, like, if you can tell one of these partners is throwing curveballs at you and maybe giving you a dirty look, like any tip for, do you go back to them afterwards later and say, hey, I just want to make sure you got all your questions answered? Like, do you try and groom that troublemaker at all? Or I don't know, any other tips for kind of later stage meetings that you want to share that we haven't covered?
Some of it comes down to research, right? Because every firm is a little bit different. In some firms, it takes a unanimous consent. In some firms, one person can lead the deal and it doesn't matter if anyone else agrees. In some, it's majority. So part of it, when you're in those earlier meetings, you need to understand their process. So if you understand their process before getting into that partner meeting, you might know, well, even if one doesn't like me, that won't actually sabotage the deal. Or you might know that if one doesn't like me, it might sabotage the deal. And if you know it's going to sabotage it, you might want to, what I would actually suggest is reach out to your champion, the one who you feel like is most strongly aligned, and try to figure out what's going on with that person. Is that just their general demeanor, or does it feel like something is off and you need to do some work on that person? In which case, we always want to be operating with the most context possible before making assumptions. I think this is something you've probably seen a lot in founders, and I see it with the founders that I work with. They make a lot of assumptions about why an investor is doing something. Even sometimes investors will ask dumb questions. I'm like, sometimes they're asking dumb questions to see how you respond to them, because they want to see, do you respond in like a almost aggressive way back, or do you just take it and you answer it calmly again and you just are pleasant to deal with? Sometimes they're asking bad questions because something bad happened to them that day, so they're just not fully there, and that's human nature. But if you lash out and you're like, that's a really dumb question, I can't believe you asked that, but here's how we think about it. Well, so we always want more context and don't make assumptions. So I would consider doing those sort of things if you realize somebody is really off. And the other piece of advice I'd give in these conversations with partners is a lot of the way founders answer questions is incorrect. And what I mean by this is they oftentimes answer questions directly. They accept the premise of the question. And in politics, you see this where the politician almost never accepts the premise of a question. They always answer something different. And I'm not saying that you want to skirt around things, because you certainly don't. But what you want to do is you want to answer them in a better frame control position. Oftentimes, if we answer something directly, we say, well, this is why Google won't do this. And then it's a step-by-step play trying to disprove something that we all know is possible. Instead, if we paint a big vision of, I totally understand where the Google question comes in. Here's how we're thinking about what we're building at Founder Fundraising. And I were to talk about the big vision and what that looks like and the people that we need in order to do that and the time and effort that it takes to make that happen and the focus it requires and the messaging it requires. And I share this big vision, and then I come back and I say, so when we think about Google, they would have to be able to implement this and this and this and this. And can they? Sure. But we believe that's going to take their focus away from the core thing that they do well. Meanwhile, we're hyper-focused. So like you have the Marines who serve a goal in the military. You also have the Navy SEALs who serve a goal. And the Marines aren't trying to become the Navy SEALs. They're trying to become the Marines and make the Marines better because it's what they do. And that's how we think about this kind of situation. So that's how I like to think about answering a lot of times in those situations, because you can get these indirect answers that actually answer the question in a really compelling way by showing the big vision.
That's great. Yeah, that's definitely advanced level tactics, but it is key, and you see that. And I think kind of in that same general vein, when I see founders start to get really defensive in pitch meetings, it's like, oh, this is going bad. This is going sideways. Like when the founder starts to really feel like they're being attacked and get on the defensive. So you have to kind of let things, be the duck with the water sliding off of you sometimes, and reframe those questions a bit. I like that. Great. Anything else we haven't covered? I do want to talk about building investor relationships and a few other things, but anything else on running pitch meetings, presenting the story that we haven't covered? We got it.
I think we probably could talk about this, for days. I will say a quick bit of insight. When I think about founder story and vision story, I like those to be somewhere in the neighborhood of 2 to 3 minutes a piece. And so that looks like about 400 to 600 words for anyone trying to create it. There's a concept that I call storytelling density. We're not going to get into that here. It's just going to take too much time. But storytelling density and a lot of the principles will be in the book that I released later this year called Competitive Storytelling, to break that down. But that's just like a kind of guidepost for founders to know how long it should be, because it's something I get asked a lot. And I think it's about 2 to 3 minutes for each of them.
Yeah, really good. Cool. Let's move on a bit. Building relationships with investors, which is so key. And this happens both before the pitch meeting and after the pitch meeting, but, present some guidance on how to do that. I think a lot of founders get confused and frustrated by this process. They come on Founder Suite, for example, and they say, you've got 6,000 investors in SaaS in your database. How do I blast all of them 10 messages? And like, no, stop. Relationship building is where we start. So what's your sort of ABCs 101 on building investor relationships? Go.
Well, I think it starts, honestly, identifying the right investors. And to your point, with Founder Suite, like, it's actually one that I tell founders to go and use, just because it has resources, right? It helps them. It makes their life a lot easier. And there's enough stress in this process if we can have good tools and good services that help like they should. So I think first is going to a place like Founder Suite where you have that ability, right? And this is like, you did not ask me to say that. That is the truth of
I'm not paying Robbie, full disclosure, I'm not paying Robbie to plug Founder Suite, but I do appreciate it anyway.
It's what I do, because I know the utility there. So once we identify the right investors, well, now your job is to figure out who do you know that can make an introduction to them. And if you don't know somebody who can make an introduction to them, go find where they are. And what I mean by that is sometimes they're going to be at events. So maybe you go to events and you meet them. It also is they're online. So they might be tweeting. They might be writing on LinkedIn. They might be sending a newsletter. They might write articles. And you can start engaging on these forums and get to know people there. And yes, it takes a little bit of work, but I'm telling you, I came from the trial world in Dallas. I didn't know a single VC. I didn't know a single tech person. I didn't know a single founder when I started back at the beginning of 2020. And at this point, 3 years later, that is entirely different for where I'm at. And it's been, I went through my calendar last year and I had hundreds of just intro meetings with people that were for no other reason than just meeting them. So you have to find ways to get in front of them and build connections and show them what you're building. So you can do that directly, like I just said. The other way you do it is you start building your own founder brand. Founders can share what they're doing. In fact, you do this quite well. I kind of knew Founder Suite, but I did not know you until I started seeing what you were posting on LinkedIn. And all of a sudden I was like, whoa, this is really interesting, good stuff, and started following and then interacting and getting to know who you were. And that's actually how you came to me, was I believe through my LinkedIn as well, seeing what was going on. So building a founder brand actually brings people your way. Share what your expertise is, share what your insights are, share what you're building, talk about your customers. Why do they love it? Share stories. And it will build a community around you, both of investors and founders. And the value in getting founders around you is you build relationships with the founders. And guess what? The founders know 50 VCs or they know 100 VCs. And all of a sudden they can introduce you to a bunch of them as well. And now what you've done is over the course of 6, 9, 12 months, you have 100 plus VCs that you can reach out to when you're ready to fundraise. You have 50, 100 warm intros that can reach out to other investors you want to talk to. And now you have, 200 plus potential VCs who invest in your sector at your stage that you can go to, who either know you or know the person who is introing you. So you are using their social capital to your benefit. So I think those are kind of the strategies that I tell any founder to really leverage in those situations.
That was a great, I love that. And I often don't think of building the personal brand as a way to network with investors, but it totally is. If you were going to give someone advice, and the answer is probably it depends, but if you're coaching a founder, they have LinkedIn, Twitter, TikTok, blog, Substack. I mean, there's multiple ways to build a brand out there. Medium, right? Like, but we only have so many hours in a day. Where would you point them as the most effective way to most effective place to build a brand? Any thoughts on that, or is it gonna depend on that founder?
A little bit, but I would say I would look at what are you strongest at, right? What is that founder strongest at? Are they great at like the witty hot takes on Twitter that are like spur of the moment? Go live on Twitter. Twitter is great. Tons of investors there. One of the founders that I worked with is Yulia Bell, and she's the founder of Notice. And Notice actually tracks how investors and founders and different people are using Twitter to create buzz and get awareness. And so they built a really interesting product on Twitter for founders to use it. And that's because she saw the benefit herself. And in fact, that's how we first met and built the relationship. And Yulia was one of the people that first introduced me to Alexis Ohanian at 776. And what I've seen is, again, Twitter opened up a bunch of doors for me personally. And so it can for other founders. If you really like video, you can play around, obviously, on TikTok or YouTube and see where do people live that are following you the most? Or are you trying to speak to customers? Are you trying to speak to investors? Are you trying to speak to founders? And so I generally find that if you're speaking to investors and founders, the best place is Twitter and LinkedIn. And then very specific, follow newsletters that you think are hyper valuable. Because the interesting thing is if you respond to an email newsletter, it is high likelihood that that person reads the response, because not a lot of people actually reply to email newsletters. And so they go directly into the inbox, whereas like a DM to an investor, I mean, they get hundreds, if not thousands of those. So it's hard to cut through the noise. Again, lots of different strategies, but I would say Twitter and LinkedIn tend to be the two best that I see for building a founder brand. And then you can use more specific kind of targeted pieces to reach very specific investors.
Yeah, I like that. One thing now that you mention it, hadn't even like consciously planned this, but something I notice I'm doing these days is probably based on previous clicking activity on Medium, which articles I'm clicking on. I'm now getting a Medium newsletter, I guess, every day that it's all about fundraising topics. And so I'll go and read that article, check out that article, and then I'll go and reach out to that person on LinkedIn saying, hey, I read your article. I really like this. Let's connect on LinkedIn. Here's what I do. And I often have built some great relationships by taking my Medium summary and then going to LinkedIn and connecting through that. And then sometimes that leads to real calls and, coffees, stuff like that. It's kind of an interesting way that's been working for me personally. So, yeah, I'm sure there's 1,000 ways to skin this cat. When do you start the relationship building process? This is something I think is kind of an interesting. I have strong opinions about when, and my opinion is generally a year before you want to raise money, although that's hard to do. But do you start this when you're just starting to fundraise? Does it really make sense to start to do this a long time in advance, or what do you think? Any thoughts on that?
Early stage, it's obviously much harder, right? When you're building a pre-seed, like you're building the thing, so you don't have as much time to build those relationships. So that's why pre-seed can be, you're just kind of hustling and making things happen. But when I think about as you get more mature, that time horizon should expand out. And so, when you're raising your Series A, I mean, you should be talking to investors 9 months ahead of time. And part of this is what you're trying to do is you're predicting the future for them. You're saying, hey, we're going to do this thing. So that when you get 9 months down the road, you can say, I told you we were going to do this thing, and we did this thing, and now here's what's next. And you create trust, right? Because you've called your shot, kind of like Babe Ruth did back in the day for any baseball fans, when he called his shot and said, I'm going to hit a home run, and then he hit a home run. That's what you want to do, as well as build the relationship. So I like to think really it's a 9-month process if you're raising a Series A. Series B, again, can be 9, 12 months. I think generally that's about the time horizon you should always be thinking. It can expand a little bit if you're going for much, much bigger rounds. It's going to take time. And that doesn't mean that you're spending all your time. You're spending just small periods of time. You're taking 2 or 3 meetings a week with investors just to start building the relationship. So by the time you get a year later, you've had 100+ conversations who know you now. And so as you get more mature, right, the founder has to step more into making sure you never run out of money, which means investors. You have to make sure that you're recruiting great talent. So you spend a ton of time there, and then you're setting the vision of the company. And that really becomes your role. So I think about that. If you're raising a seed, I would say try to start building relationships at least 6 months out. You should have a little bit money from pre-seed so you can have a bit of a team who can also be building while you're doing some of that. But especially before your Series A and beyond, you need to be spending at least 9 months building those relationships. If you want to run a really seamless process, that's going to end up working.
Yeah, very good. I have asked you a lot of questions already. I don't want to keep you forever because I could probably pepper you with questions for another 2 hours, but any other advice you commonly share with your clients, anything we haven't covered on this so far, and it can be about anything, pitch, story, running a process, building relationships, closing around, anything else?
So a lot of what we've gone over is tactics, and I certainly love tactics, but I tell any founder I work with, in fact, I just had one close a seed round. And the biggest change that we implemented was not the story, it was not the process, it was actually mindset and how that founder was feeling about it. And this sounds strange because it's like, well, it should just be, if I get the right story and I have the right metrics and I run the right process, I should fundraise. But the reality is the mindset is what actually creates the energy transfer and puts it out into that space that allows an investor to feel that founder has that it factor. So when founders are operating from a scarcity mindset and are operating in fear, things do not go well because they make mistakes, they lash out, they're short with things, their voice demonstrates that, and investors end up getting pushed away. Because when we are operating in fear, we tend to attract people who are also operating in fear, which we don't want an investor who's operating in fear because then they're going to be fearful to make the investment. Instead, we want to be operating right from that place of confidence and abundance that there's plenty of money out there. There are plenty of investors who are excited by this. We're building a huge business. People want to be involved. And that actually attracts that same energy back to you. So it sounds like a little bit like new agey, whatever it is. And I wouldn't have believed this if I said this, like a couple of years ago. But at this point, I've seen it time and time again where that shift, getting somebody into the right mental headspace, especially because fundraising is lonely and stressful. You feel like you are out on an island with a storm around you. And it's all going to come crashing down at any moment because you have a great call with an investor and then they end up ghosting you and finally saying no. And you're like, no one's going to invest. And it's very easy to fall into that trap. But instead, if we keep that mindset of we're building something great, this is inevitable that we are successful, and I'm just going to keep moving forward day after day, do the right things, and the process will take care of the outcome. That's really where it comes down to what a successful versus a failed fundraise looks like. So getting that right is so important. This is why I draw a lot of inspiration from athletes, because you can learn so much from athletes about how they train their mindset and get in that right space. Because we all know the story of Michael Jordan, didn't make his high school team, ends up being the greatest player of all time. We have also the fact that he missed more game-winning shots than anybody in history. And yet nobody remembers that. They remember all the game-winning shots that he made. So we have to realize in order to make the game-winning shots, we have to miss a whole bunch too. And we have to always operate from that place of, give me the ball. I want to take the shot. We're going to win this game.
Yeah, I like it. Good. Be like Mike. I like that. Excellent. This is all really good stuff. If people want to learn more, it's founderfundraising.com. And can people, if they want to work with you, do they apply? Is there a form? Do they just contact you? What's the engagement process?
Yeah, there's an apply form on our site to get in touch with us. And then we'll, provide more details, talk to you, see if it's a good fit. We want to make sure that everybody wins. At the end of the day, that's really what it should be about, that we can help the founder. Founder's going to be successful. They feel good about the process. We enjoy working with them. And it's for, very small numbers that we work with for a reason, because we really want to get hands-on and get in the trenches with the founder. So that's where they can find me. That's where they can apply. They can follow me on LinkedIn, of course, for lots of content over there. And also YouTube, where we're giving a big push with lots of videos to try to help founders too.
Yeah. Do you find YouTube, we throw stuff up. We'll put this up on YouTube. I'm not getting a ton of traction on YouTube. Are you finding YouTube's working for you? it might just be, I don't know how to promote on YouTube, but yeah.
We are growing. Part of founder fundraising and competitive storytelling is building a media brand around this, because we want to build that media brand to support our founders. Because if we can share their stories and share what's going on around them and help them with distribution through our own channels, that's a win for everybody. So we are spending aggressively over there in terms of like the team and production quality, and really just focused on growing that channel, while also just wanting to put out good content, because obviously working one-on-one in that kind of founder fundraising is not a cheap process. And we want to make sure that founders who can't afford that, especially early on, pre-seed and seed, have the opportunity to still get a lot of the insight and a lot of the, experience that I've had at this point in a free way. And I love being on video. It helps me explain concepts easier than just writing all the time. So that's why we're over there.
That's good stuff. Excellent. Robbie, thank you very much. Again, founderfundraising.com. Check it out. Check out the YouTube channel. And I'm sure we'll be interacting again, hopefully creating some more joint content that we can put out to our network. So thank you, sir. Enjoy your rest of your day in Miami there, and I'll talk to you again soon.
Thanks so much, Nathan.